where you're spending your money. So that's a lot about what we're going to talk about today, is being able to tell your money what to do. That's the most important thing. So we're going to start talking about how you set up a budget, what is most important, what's necessary, what's not necessary, and get over some of the challenges that many people do have with that. So Spencer, and I can share that. Do you want to, do I need to take, I've got it up here, so I can share it with you.
Share your screen there. We are fabulous.
Yeah. So do you see this? The 50, 30, 20 budget?
Yep.
Okay.
Well, we see
So,
KeyBank at the moment. Yes, we do see it. Yep.
yes, yes, yes. So when we talk about creating your 50, 30, 20 budget, we talk about, you know, for all of you right now, the 50% is your rent, your insurance, your groceries. So that usually will include some level of transportation, whether it's your car or your metro ticket, etc. We say the 30% looks at your wants, shopping, outside of food, travel, entertainment. The 20% we look at having financial goals, paying off debt, building your savings, and prepare for retirement. So one of the things that you would start doing is you compute your monthly household income. How much are you bringing home together? And this is going to be a fillable worksheet, so that's going to be great for you. The next thing, you'll be able to determine what are your needs, right? So you'll be able to go through all of that, listing everything and how much you'll be paying monthly. One of the great things that I like about this part, and especially thinking about how you're doing your bill payment, right? So utilize your banking as a tool. So I have automatic bill pay for all of my bills. I put everything in my automatic bill pay. I tell it what day to go out. I live according to my budget. So once that bill is paid, the money leaves my checking account. It goes postage free for me, and I don't have to write a check or pay for checks. And it goes out to the bill collector. And then it's a guaranteed check, and the money comes out of your account immediately. So that's one way to use that as a tool. And, you know, then you can work forward from there. But it also, one of those things that we'll talk about later is how that will also feed into your credit rating. If you are never late for a bill, what is that going to look like? And so if you're on a vacation, if you're doing your studies and exam time, you don't have time to think about those things, fix it and forget it. Put it at the minimum that you know that you would pay so that you're never late. Sometimes you might not pay the full amount. You can go in each month and tweak that amount, but it's a really great way to be able to manage your funds. When you talk about determining your wants, this is the other, you know, the other side. Like I said, the most important thing to take away is thinking about, I can tell my money what to do. So what are your wants? And when you list them all out here, and then you see how much it's costing you, sometimes it really causes you to make different decisions. At one point in time, my husband was taking our daughters out for coffee twice a week to Starbucks. I added that up for a year, and you know, sometimes we'd all go on Sundays. And I added it up for what it was going to cost for a year because that's how my mind works. And at the end of the day, we realized that we could have had a family vacation if we had not done that. And so one day, and I'm a frugal person, one day it was my birthday, walked into Starbucks, they had their machines for 75% off. I bought the machine, took it home, learned how to make frappuccinos, and everybody was happy. And I could take the machine with me if we went on vacation, which is also great. The next thing you want to talk about is setting your goals. Allot 20% of your monthly budget to savings, investments, and additional debt payments. So when you're looking at that, thinking about, what do you want for your future? How much money would you like to set aside? Here, it's an important thing. So many people in college are offered credit cards. I think that credit cards can be an amazing tool, and we'll talk about those later. But if you have an emergency savings account, if you have an emergency fund, then you're least likely to have to utilize your credit cards. So this is a place to think about having that emergency savings first. You have enough for a small, medium, emergency or a job loss. So you want to think about those things. How much of the previous thing of what your needs were, if you take 3 to 6 months of that and put that in a savings account, then you know that you have a level of financial security during any kind of transition. So thinking about how to, pay off your student debt if you have that, build savings and prepare for retirement. When you're thinking about paying yourself first, this is where you go in. And most people, when they walk into a new role, one of the first things I tell them is to enroll in your 401k, because you do that and it's money you never see, you never miss. And as your income rises, your opportunity in that rises. So you'll be investing again for your future. Does that help with that question?
Thank you so much, Judy.
Was there another question?
There's one more question, and then you feel free to get on with the presentation, how you're envisioning your presentation.
Yeah.
Will you introduce, recommend tools or apps that can help budgeting efficiently?
Yes. So we have a couple of things. The first one would be we have something, most banks have things on their website in order to help you budget. Some people use, I like EveryDollar. Some people use something with Acorn, or they use some other lesser apps. For me, I think that EveryDollar takes into account pretty much everything that you would be spending. And so from that perspective, it is a great tool. And it's somewhat cumbersome when you think about getting into it, but because it makes you truly think about all the ways that you would be spending your money. And so up to whether it would be a magazine, whether it would be, just really anything. So when you're thinking about that, wanting to make sure that you take the time to put it in, once you do, you can truly see where you're spending your money. And we're just opening up that presentation.
Folks, if you have questions, we currently have 40 attendees. If you have questions, feel free to put them in the chat box rather than the Q&A. It's easier for us to see if you put it in the chat box and you put it to presenters and host, or just all presenters is fine, and then we'll be able to all see that. If you put it in the Q&A, it's a little bit more tricky for folks to see those questions. So please feel free to put them in the chat and we will get to them during this presentation. Just a reminder, this presentation is recorded. So if there is information you do not want to give out, be aware that if you ask a question, that it is being recorded and it will be available to folks after the fact. Once we're done with the presentation, we can then go into a Q&A session, and that Q&A session will not be recorded, so you can feel a little bit more comfortable then potentially. So just so you know what you're up to with that. Over to you, Judy.
Thank you. So being a bank manager for quite a few years, I've also worked on the investment side of understanding wealth management. So this is a true passion of mine, to help people understand managing your finances, but even more so how to create and build wealth for yourself. So with our Key at Work process, we talk about the fact that the world has changed for everyone. But when you think about setting a budget, saving more money, and managing your credit score, it is the thing that's going to make a big difference in your life. When we think about setting a budget, we take a look at your budget, which we discussed, and current spending can help figure out how to save more money or avoid taking on more debt to pay the things you need. We'll review a few easy steps to setting up your budget, which we've done on the 50-30-20 schedule. Identify your sources of income, and that can be everything that you do. If you have a side hustle, include it. Take charge of your spending. So some people keep tabs on everything that there's an envelope system that people have used. You can go through your charges at the end of the week. Some people do it by paper, or any way that you do it, but think about segmenting the areas that you are spending. Think about covering your necessities and decide where you want your money to go. When you're talking about saving more money, what's important to you? Thinking about handling unplanned expenses without incurring any debt. This helps you to not have to use high interest credit cards for emergencies. Then thinking about retiring more comfortably. If you think about it now and start thinking about interest calculators, thinking about earning interest on interest and investing for the future, then you can think about how you can retire comfortably now. So you can decide now what you want that to look like. Paying for children or grandchildren's education for some people, and some of you have hopefully been benefactors of that, or being better prepared for larger purchases. As we talked about managing your credit score and why is that important, your credit score can affect your ability to be approved for a loan, credit card, mortgage, or line of credit. We'll review what makes up your credit score, thinking about your payment history, your credit utilization. So if you have a credit card and you charge more than 30% of it, once you go over the 30% of your limit, it adversely affects your credit rating. But if you go up to 30% and pay it off every month, your credit score will increase. When you think about the length of credit history, how long you have for that, or the credit mix, what type of credit have you taken on? There's good debt and bad debt. Thinking about like a house and a car is not bad debt. If your car isn't, above your means, it's not considered bad debt. New credit, how often do you get new lines of credit? How many times do you have someone look at you for your doing a credit hit or a credit inquiry for you? And that can adversely affect your credit rating as well. Remember when we talked about that these are the main tools that we use. So we'll go through this during the seminar. What is the 50-30-20, or during the series, I should say? What is the 50-30-20 budget? We discussed that. How to build your savings to reach your financial goals. How much should you have in savings? How to improve your credit score, and paying off student loans, and how to start building credit. When you think about all of those different areas, having the budget at the beginning is the thing that is going to set you up for success. So many people say that they don't have time to create this budget. And that's why this wonderful, spreadsheet that we're going to share with you all today is the best place to start. We'd like for you to look at that and start setting it up so it will influence a lot of the things that we talk about during this series. People are afraid, they feel like sometimes they don't have enough money to start with a budget, but if you have, $20 a week and you'd like to have $5 left over, how do you want to manage that? So really thinking about any aspect of how that budget can work well for you is important, but really it's overcoming the fear is really the first thing. And once you start getting into these money managing, money building habits, that is the thing that will influence how you go through life. So one of the things that I share with a lot of people when they're thinking about buying a car, if you're thinking about buying a car and you've decided that your car payment could be $300 a month, my suggestion is that you take $300 a month and put it in the bank for 6 months. Then you take the amount of money that you think you'd be spending in gas and you put that in the bank. And then you take the money that you would be paying for the increased auto insurance. You put that in the bank. And then you have to think about taxes and registration. You better sort of have that in the bank because a lot of those costs are going to be upfront. If you feel after 6 months that you can afford a $300 a month payment, that's comfortable for you, that you have enough that if you had a minor breakdown, if the car is not under warranty, that you would then be able to pay that, right, without having to go to your credit cards. And if you could comfortably pay the taxes and insurance every year, depending on what state you'll be living in, then if you can do that for 6 months and you're aware of how that feels, it's a great decision for you to think, because then you know what it feels like. Many people will make the big purchase and then have to endure the other side of that. And a lot of these habits that we're discussing are so that you will not have to have that impact you. It's the same with a house. So many people are paying rent. If you're paying, $800 to $1,000 a month in rent, there are homes that as first-time home buyers you could buy. So we'll talk about a savings plan, we'll talk about the things that you would need to do in this series in order to obtain that. So all of these things, but especially starting with the 50-30-20 budget, can set you up for success in life and being able to tell your money what to do. Are there any questions?
We have several questions in the chat, Judy. Thank you so much. We have first one in from Kales or Kades is what type of accounts do you recommend for the best interest rates to boost savings?
So a lot of savings accounts are balance based, right? And right now there aren't great interest rates on savings accounts, or because when the interest rate is low for borrowing money, which it is right now for homes and for cars, it is not high returning your investment on interest. So there are other things that my colleague Kathleen, who works with another financial institution, would be able to share. That's more on the investment side that you would then be thinking about risk, or you would be thinking about, other products. We have investments of all sorts. We have, and I used to be licensed for investing. And so when you're not licensed for investing, you really should not share a lot of information about it, even though I know those things. But I will give you a couple of ideas. There are things called annuities that are insurance backed that you can get through banks and financial institutions. We have them here and they have them, they're available. There are many, you can think about putting money in the stock market. The returns on investment are higher there. But if you're looking for that interest rate in a certificate of deposit, something that you can put your money in, has no risk, then a bank is really a great place for your savings account to start. That's your emergency savings. But right now the interest rates are not high there, but they will go up. But as the interest rates go up, so will the cost of borrowing money. That will also go up. So when is a good time to borrow money? Now. When is a good time to think about the highest return on investment that you can get in investments or alternative investment strategies other than just a savings account? That is this time now in order to get higher returns.
Next question we have is, if you have very little use of your credit card, would you be able to build a good credit score?
So one of the things that we do as an institution is we take every person through a financial wellness review. It takes 20 to 30 minutes initially. It helps us to understand exactly what you have and how you're going to use your checking account, savings account, credit card. So we set you up for, first of all, the one that will work best for you. So when you say that you have a credit card but you don't use it, does that mean that if you are able to use that as a tool instead of just having it in your purse or wallet, if you were going to use it as a tool, so use it for all of your groceries, all of your expenses that you could, and pay it off at the end of the month, would you then be able to rack up rewards points or cash back on things that you already spend money on? So it's thinking wisely about how to use the services that are out there to benefit you. When our daughters were in college, my husband and I used our credit cards a lot more than we wanted to. But at the end of that time, our daughter was doing her semester abroad in Italy, so we used our points to go round trip to Italy for two people. So don't tell them. So look how that paid off. I used it for gas. We used it for everything. But you pay it off at the end of the month. And one of the things that you might consider doing is, if you don't feel that you are disciplined enough okay? Because I really want to set you up for success. If you don't feel like you're disciplined enough to use your credit card and pay it off at the end of the month, I want you to take the budget that you've set aside for whatever you're going to spend and pay your credit card at the beginning of the month. Use all of that money, reap all the rewards, whether it's cash back or rewards points for travel. You can get Visa gift cards. I mean, there's so much that you can do. With my mother, she uses her credit card, and we go into her rewards section around holiday time. She sends gift cards to all of her grandchildren from all the rewards points that she's gotten for the year. Isn't that pretty amazing? So that's how you make your money work for you and the financial tools work for you.
Great
So
question.
so I would say, you know, if you, it's great to have it. If you don't use it necessarily, you will not build up a credit history, because a credit history is made up of the fact that you're borrowing and you're paying back. It shows your character. Do you pay on time? Because sometimes lazy payments, just paying a day after, it's not a good thing. Pay 2 days before. If you know that it has to be there, that's why the automatic payment system is amazing, because it takes the stress and worry and it helps create success for you. And the other side of credit score is that credit score can affect you with careers as well. There are many fiduciary careers that, you know, and many roles that they do credit check on you before you can be offered employment. Banking and investing is one of those. Next question.
Brilliant. Yeah, next one coming up in the chat. We have, and this might require some clarification, a question about what are the benefits of a money market versus a savings account? And we might also need some introduction about what a money market is. Is it better to save in one account over the other?
Yes. So a money market savings account is a savings account that you can actually write a check on, but you can only write up to 6 checks in 1 month. So it is governed, it's, you know, governed by the government to say that if it's a savings account, you cannot access it. You shouldn't access it more than 6 times a month. That goes for any savings account. If you go to the teller and take out money, that's one thing, but you can't have an electronic fund come out of your savings account more than 6 times in a month. There are usually fees associated with that, but if you continue to do it more than 6 times in a month, they would convert it to a checking account by law. So a money market account is a savings account that usually, depending on your balance tier, can earn a considerable amount. You know, when rates are good, it is the best place for funds to be, to have your money liquid. So that if you were saving for that car that you knew that you were just waiting for the right deal, a money market savings would be great for that. And then when you found the car, you could go and write a check for that amount. Your savings account, a normal savings account that might be used as overdraft protection for your checking account, still you have some limitations as to how many times you can have money come out of there once a month, you know, every month. But you don't want to have the savings that you're setting aside for special things to be impacted by a Dunkin' Donuts run. So that's the biggest difference between a money market and a checking account and a savings account. And they do call them money market savings, but they do have check access.
Brilliant. And a follow-up question to that, if I have an established money market account, not with KeyBank, do they adjust the interest in accordance with the changing rates, or am I locked into the rate from when I opened the account?
So you are not locked into the rate. Sometimes there are special times that you can make deposits. So usually when banks are accepting deposits and they're saying, if you come and bring $25,000, we will lock your rate in right now. Even anything at 0.5 would be exciting. But, you know, saying we'll give you 0.5% for 6 months. Then you put your money in that money market account with the qualifying balance, and it will stay at that rate for the time that was stated. After that, it then would adjust to whatever the market rate was right now, the annual percentage rate, which right now is like 0.01%. So yes, there are opportunities to get more for a locked in period of time with that, but it isn't a daily occurrence. And once it goes in for 0.5%, then it would not stay locked there, because when the interest rate gets up to 2%, you want the 2%. So it will just adjust with the annual percentage rate.
Brilliant. I wish I had $25,000 laying around as a graduate student. There might be a few around here that do, but I think probably not just 25,000, but there are variable
No.
amounts for one.
It's every amount. Thank you for clarifying,
Right.
Stuart. Yes, if you can start a money market account with, very smaller amounts. It's just, sometimes, but there are specials for different levels, as I was speaking. But yeah, you can get locked into a good rate when you're, new clients. When for us, we're a relationship bank. So when new things happen, we call our clients and let them know there's something new that we'd like you to be able to take advantage of. Are you interested?
Brilliant. So folks, we have room for more questions here. If you have questions, please put them in the chat and send them to all panelists. Some of you may have joined a little later. I want to tell you about the fact that this is a long series. This isn't just the only financial session that we're having. We're actually going to be doing these every 2 weeks, except for one small changeover, I think, near the 4th of July, but otherwise it's every 2 weeks. Judy and Kathleen have agreed to be joining us with a variety of different topics and a couple of other guest folk as well. And we have other topics such as understanding and managing debt, credit scores. So we're going to dig deep into just credit scores itself. So don't worry that if you didn't get everything you want out of credit scores here now, there's a whole session on that. Loans, how to find the best loans and loan forgiveness programs. And potentially, if our current president pushes through the $50,000 cancellation of student debt, which I'm very excited and hoping will happen, we can have a discussion on that as well, because that will change my life forever. But probably won't, but we'll see. Managing money in a relationship, that's another one that's coming up. I really think that will be interesting, because the dynamics of dealing with money, where someone else might have a very different way of dealing with money than you. I mean, that's always a challenging thing when you're managing that in a relationship. Preparing for divorce, and that's never a fun topic to be talking about, but one seriously that not a lot of people prepare for, I imagine, because you don't prepare really when you're thinking about getting married. You don't prepare for divorce. So I think that's going to be very useful for many folks. Investment information and tips. So if you want to make more back from your money potentially than what we're doing in savings accounts. So I'm not an expert, so I'm not giving you any advice here, but I have a little bit of money put in investments. I have a little bit put in saving accounts, and I put some money elsewhere. And sometimes things do better in some places and in others. So I'm looking forward to getting more tips on that. Rent versus home mortgages and home ownership. That's another big one there as well coming up. Planning for children. I have a 6-month-old, so that is definitely something I'm very interested in hearing about, because I didn't realize kids were very expensive. Even a 6-month-old is very, very expensive. So I have now just added to my budget different budget line items for baby food, for baby clothes, and then for baby activities. Not that we can do much during COVID, but after COVID, swimming lessons, things like that, all those things cost money, right? So again, this is why this is helpful, this session, because I get to look at the budgeting tips, and I'm going to work out my 50, 30, 20 as well. That's definitely something I'm going to use. And then we're also throwing around some other topics as well, things such as taxes, preparing for IRS auditing, disparities in finances, especially around race and class, and navigating discrimination, advocating for financial freedom. That's a very exciting topic. Pensions, retirement funds, unions, credit protection. So we have a lot on the plate. This is going to be going on for the next few months. If there are other topics that you want that you haven't heard here, please let me know, and I'll work closely with Kathleen and Judy and some of our other colleagues to work out if we're able to find some experts to help you folk. These are being recorded, as I said, so we'll make them available afterwards once they've been properly captioned so that they're accessible for all folks. And I'm going to now look at the chat to see if we've got any more questions. Okay, we do have a few.
So, and Stuart, one of the things that I wanted to share as well is when you're thinking about the 50, 30, 20 budget, the thing that really is there is that I want you to think about how much does it cost to be you? Does that mean your hair and nails? Does that mean, beer on Friday with the people? Does that mean preparing with your bike? How much does it really cost to be you? And thinking about is going more in depth at where you're buying your groceries. Could you save money? I'm a huge Aldi fan. I've been shopping at Aldi for 30 years, and they're owned by the same people as Trader Joe's. So, when you're buying Aldi, what are you really buying? So it's thinking really more in depth about where you're spending your money and what works well for you, and where you can cut costs in order to invest more to create and build wealth for yourself.
Brilliant. And the Aldi tip is really, I will back that up. We went from spending at a major competitor, we were spending for our family $250 basically every 10 days. And now that's down to $120 without sacrificing quality. So, I mean, you can make some serious, you don't get the choices perhaps. And I'm not an advocate, I'm not advocating for Aldi's here as you know, there are many other opportunity, other
There
um,
are.
similar kind of approaches, but it's a smaller selection, but they're still just as good, and you can save a lot of money there. So definitely a wonderful tip there. A question from the chat now. Right now, about 49% of my monthly income is dedicated to rent. Outside of moving to a less expensive apartment, are there some other options I can do to improve this situation?
So, I had roommates forever. So if that's not, that's a considerable amount of your income for the month in order to that impacting your budget. Normally, if you're above 40%, then you're not a good credit risk. So your opportunity for borrowing more money above what your costs are for living is greatly diminished. And that's going to affect your credit score as well. So thinking about, are there other things that you could do? So, we're talking about, do you have cable? Can you get a Roku stick? Or are you streaming? I'm shutting off my home phone finally after forever, because it's $44 a month. And so $44 a month, right? It's not, that's a lot of money for a phone that I don't use. So look at your costs. When you put everything down on your budget sheet, you're going to then be able to make decisions about what you need. But, is it that thing that you do take on a roommate? If that's an opportunity for you? I know that many people, after going through college and all of those things, you're so tired of living with other people. My daughter was there, right? And I'm sure she'd not be that excited that I would use her as an example, but she was, tired of living with other people, and she was commuting to a job that was a little further away from our home. So she rented for a year and saw how much money she was spending and realized what she could have invested that money in, and looking at having a mother who's in finance, where she could have invested that money and lived rent free, or lived in other things, and just had maybe even bought a new car, would have helped her in the long run to be more financially stable. So it really is thinking about, and safe neighborhood safety matters, and your comfort, right? I'm that all matters, but what can you do? Are you going to get a side hustle? Are you going to, cook a great meal for somebody, or you help somebody study, or do some, IT work for somebody? What can you do then to increase your income to make this need or luxury more affordable? Does
Really
that help?
appreciate it.
Yeah.
Absolutely, that's great. I'm wondering, because some folk may have joined us late, that you had done a wonderful, showed us that wonderful 30, 50, 30, 20 budget sheet. Would you mind going over that again? I
Yeah,
think that would be very helpful for folks. And I also want to let people know that we will be sending out these materials in an email next week to everybody who's here as an attendee. So that will all go out to you folks. I recommend you look through these. Obviously, this is part from KeyBank, but there are many other banks that can also provide similar things. But we're very grateful for Judy being here and providing her expertise on this. So you may want to use this one. You may want to look at other ones as well. But at least starting somewhere gives you an idea of how you can work with it, and then you can work from there. Just as if you're using different programs for budgeting. So we have the every dollar budget, versus using Mint, using other places. You might just want to find something that works for you, but starting that journey is the important part, I think. Anyway, I've waffled enough. I'll hand it back to the expert, Judy.
So this is, for those of you who may have joined late, this is our 50, 30, 20 budget sheet, talking about 50% of needs being rent, insurance, and groceries, 30% being travel, entertainment, other things that you want but aren't necessarily needs, financial goals, paying off all debt, build savings, and preparing for retirement. Uh, During the series, we'll go more in depth into many of these areas. But if you start here and do this work of adding up how much your monthly household income is, because sometimes people don't want to know that number. Sometimes they think that by not knowing how much you bring in, that you know, maybe think about it, it's too much to think about. Maybe it's not enough. But if you spend more than you earn, it's not going to help you build wealth for yourself in the future, or even sleep well at night. And we know that COVID's been a challenge for so many, everyone, but thinking about what your needs are, writing them all down. And a lot of people, many people have reduced what they feel that they need. And, having a more minimalist approach to many things, saving much more money is incredible. And then you can see what you can do with that. So first of all, determine your needs, 50% of your budget. So determine your wants, 30%. And then looking to see what are your savings goals. And Kathleen, did you want to share just an idea of what would happen if they shared, if one of them started saving $100 a month right now at say 25?
Sure, absolutely, I can. Can you all hear me okay? Can you guys hear me?
Yes.
We can hear you, Kathleen.
And if
Okay,
somebody's got, do you have it up and ready? Yeah.
So I'm actually pulling it up because I was looking at the time, like, you know what, if I can't get to this now, I can always.
Yes, we'll have plenty of time for all of these things because that'll be part of our investing as well. But
Okay.
is there another question while she's grabbing that, Stuart?
I'm just looking through here now. We don't have another question right now.
So one of the things that's very important is, have people around you, have a bank partner. I mean, even as a banker, I have a banker. I have that person who, I can't do my own things in the bank, right? I have this person that I trust, that I do things with. I have that on the investment side. Even though I've been investing, I don't do it all day, every day. So I rely on someone who does it all day, every day for advice. I do all the personal and business banking. I do that every day. And I do community investments. So I work with nonprofits as well. So when I do those things, it makes it easier for me to do. But thinking about, just making sure that you have a relationship there is very helpful. Many people who were doing, like you've heard about the PPP loans. Some people didn't have relationships with banks. If you didn't have a bank account, you could not access the loan. So staying in good standing with a bank, making sure that your account is in good order. One thing, if you have a bank charge off, it's one of those scary, unfun things that happens when you're young and sometimes older as well. But you just want to make sure that's cleared up because that can follow you for 7 years with any other financial institution. So you just want to check your credit score, check your we have those apps within our banking system as well, so that you can check your credit score and watch it go up with all the great decisions that you're making.
Good point. And one thing I'm really glad that you shared, Judy, is that you have someone else that you work with for your banking needs too. As a person in the financial industry, I have someone who I work with because for me, I always feel like two heads is always better than one. My wife and I talk about our finances, but to have a third person coming in and have that outside kind of view, because as much as I try to be impartial and objective, I am in the marriage. So having someone outside kind of have a conversation about and bounce things off is really important. And I really also appreciate having to be completely transparent about your finances to yourself and to someone else can be scary at times. Absolutely, but it's truly important. It's also really empowering to start that. What I want to do is I'm actually going to give you a little activity. So if you have a piece of paper and a pencil, I'm going to do this with you. I want you to write something down for me. I want you to write $0. I want you to write today's date, April 9th, 2021. I don't know how old you are, so I'm going to pretend that you're 23 years old. So I would like you to write down 23 years old. So I'm writing this down as well, okay? If you started with $100 a month, $100 per month yields you $1,200 a year. I'm gonna put it in a calculator. At 23 years old, in 37 years, and you might be thinking, oh my gosh, 37 years, that's a long time away. But 37 years from now, think about it. The 23-year-old person will be 60 years old, okay? People are thinking about retiring. After those 37 years, you have contributed into this pot at $100 per month, $1,200 per year. Write this number down, please. $44,400. While that may not sound like a lot, that's just what you've contributed. I'm now going to put in an interest rate of 5%. That'd be conservative. Of 5%. What does it grow to? I want you to take your $44,400 and draw an arrow. Then I want you to write $128,051. Because that was what your money can grow to. And I use this example with a 23-year-old because I actually did talk with a 23-year-old young man. He's in his career now, and he started his job, and I went through this exercise with him, and he said, Kathleen, I can't believe it. He said, I can almost triple my money. And I said, well, yes, you can, Andres. And he says, but Kath, I might want to put in more than $100 per month as I get better and more established in my career. If I have a different job in my career, I say, absolutely. You would increase it. And it would only bring that $128,000 to more, okay? And the reason why we talk about this is that timing is everything. It's never too late to start. If you started later at 43 years old, and let's still keep it status quo, like you're going to age 60, right? So age 60 means there's only 17 years that you have. So let's use 43 years old, right? And now you are contributing $100 a month. Let's keep that the same. 5% interest, keep that the same as well. How much did you, actually, let me tell you first.
And I know we may have one other question as you're finishing this up, Kathleen, before we have to jump off.
Okay, you put in $20,000. In the 17 years, you now have amassed to $32,559. So while it's important to start soon, sometimes you can't, but just look at the difference between having 30 years of time versus 17 years time. That's what I wanted to show you. It's called compound interest, and we can go into that again at another workshop.